Hello, Professor Barnes and other students who may be seeing this. My financial analysis is on the company Alibaba. A little bit of history on the company of Alibaba. Alibaba was founded by Jack Ma and 17 friends and students in the year 1999. And Jack Ma had visited America in the 90s and saw the potential of the internet. When visiting, he saw that e-commerce online was becoming a huge thing in America and realized that in China, they didn't really have the potential or the technology for the company or e-commerce yet. But with this idea, he went back to China and he founded Alibaba. Alibaba.com was originally created as a Chinese-based business-to-business marketplace. But after being successful for a couple months, they received funding from a bank called SoftBank and a couple other companies. And then the Alibaba Group created marketplaces 1688.com and Taobao.com. These three companies would be formed and dubbed the Iron Triangle. Continuing on, the Chinese government policies have helped Alibaba grow in the nation. Why is this? Well, Chinese government policy has been very restrictive on foreign companies such as Amazon and eBay to come into the country. They've set up many barriers to entry such as tariffs and others, and the threat of government surveillance has kept American and foreign companies out of the nation. So it's allowed Alibaba to grow at a substantial rate. In the 2000s, Alibaba quickly moved on to acquiring logistics companies. They acquired Vendio, Activia, and OneTouch, and they recently purchased social media company Deng Deng Chong in the late 2000s. Then they moved on to creating their own cloud computing company called Alibaba Cloud, and thus they purchased Hi China, which is China's biggest IP provider in the nation. And recently, they IPO'd on the New York Stock Exchange in September of 2014. It was the largest IPO ever, and they raised $25 billion. So what are some current events involving Alibaba? Well, currently going on, you have the American and Chinese trade war. Alibaba hasn't had a direct effect, more of an indirect effect, meaning that Alibaba mainly does business in China and Southeast Asia, not really in the United States, and most of their manufacturing is in China, so it doesn't really affect. It doesn't have a direct effect on directly affect from the trade war, but with the slowdown in the Chinese economy, we have seen a little bit of a slowdown in the purchasing and consumer consumption of Alibaba's products. This is mainly due to a slowdown in Chinese citizens entering and buying off of Alibaba. Another current event is Jack Ma is stepping down as executive chairman. This is pretty significant because typically whenever a founder moves on from a company, you don't know exactly where the company is going to head. And on September 10th, 2019, Daniel Zhang, who is the COO currently, is replacing Ma. So that's a current event to look out for. Moving on, we're going to be looking at Alibaba's financial performance. On the left side, we have Alibaba's income statement from 2015 to 2019. And on the right, we have Alibaba's balance sheet from 2015 to 2019. Getting my statistics, I found that Morningstar.com was the most convenient. And based off of their analysis and their financial sheets, I confirmed by looking at the SEC.gov and found that these numbers are accurate. Looking at Alibaba's performance, just want to denote that the Chinese yuan is used rather than US dollar on Alibaba's financial statements. This is because Alibaba is a Chinese-based company. So some websites when looking at ratios convert Chinese yuan into USD, but I just used Chinese yuan because every single day the currency changes, so the ratios may fluctuate if you use USD. But based on Alibaba's financial statements, they are making substantial gains in growth. And in 2018 to 2019, they had 51% revenue growth year over year. And the company's net income increased from 24.2 billion won in 2015 to 87.9 billion won in 2019. On the other hand, Alibaba's operating income decreased by 17.9% year over year. I attributed this mainly to an increase of 48.5% of sales and administration expenses. You would expect to see this when a company is growing. If they are hiring more employees, you'd expect their administration expenses to be up. When looking at Alibaba's balance sheets, we saw an increase of 34.6% of assets between 2018 and 2019. Once again, this is a great sign of growth from the company. And they had an increase of 277% since 2015 alone, which is absolutely remarkable. In the year ending March 2019, Alibaba's EBITDA was 138.5%, indicating substantial profitability. And I was trying to compare other companies to Alibaba, specifically domestically, and I found that JD.com had the second biggest market share in China. So, and I looked at their EBITDA, I compared, and I found that JD.com's EBITDA was only $4 billion year ending December 2018, which is a huge gap from Alibaba. Moving on to some key Alibaba ratios. Some liquidity ratios include their current ratios, which was 1.3%, their quick ratio was 1.2%, and their debt to equity ratio was 0.23%. When looking at current ratios, you take current assets and current divided by current liability. Looking at quick ratio, we have current assets minus inventory minus prepaid expenses divided by current liabilities. And for the debt ratio, you take total liabilities minus total shareholders' equity. I then compared the industry rankings for specialty goods and retail. And the average quick ratio for the industry was 1.32%. Their quick ratio average was 0.63%, and their debt to equity ratio was 0.75%. For all these three ratios, it shows that Alibaba is right with the industry or exceeding, especially with the debt equity ratio. The fact that the debt to equity ratio is 0.3% indicates that Alibaba currently has very minimal debt compared to the industry. Moving on to some profitability ratios, we calculated that gross margin ratio was 45%, indicating healthy growth, and return on assets to 10.4%. Their profit margin was 23.32%, which is really good, and their inventory turnover rate was 31.76. So how does Alibaba compare to domestic competitors and foreign competitors? I used four main competitors: JD.com, Tencent, Amazon, and eBay. And I compared vertical analysis comparisons on their financial statement as a total percentage. When using net income, EBITDA, I looked at the percentage towards revenue as the company's income statements. And when looking at total cash, current liabilities, and total liabilities, I use vertical analysis for the company's balance sheet. I did this for all five of these companies, and I then compared. And when looking at Alibaba's vertical analysis, the company outpaces most competitors. While this analysis doesn't show exactly the full story of financial strength, these percentages are a very good benchmark between the companies. Like, for example, net income for Alibaba was 23.3%, when JD.com, the biggest specialty good retailer competitor in the country, was a negative 0.54%, indicating that Alibaba is financially very strong and very healthy. So why exactly should you invest in Alibaba? I must admit and disclose that I am a little biased. Back in September of 2018, I purchased 10 shares of Alibaba when it was at stock price around $170. I thought this was a good time to buy because the whole market as a whole was seeing a correction. If you recall back in quarter four and quarter three of the stock market last year, there was a big correction, and I thought the company is undervalued already. I'm getting it at an even bigger discount, so I started dollar cost averaging in around $170, and it ended up going around 140, where it has since recovered, and it's, I think, as of recording, is $169 share price currently. So I think the company is extremely undervalued based on the stock price, and here are some of the reasons why. The 2020 outlook calling for revenue growth is 33% year over year. And when looking at China's retail gross merchandise volume growth, it's projected to be 20% between the year 2020 and 2024. When looking at Alibaba's retail active base, it is currently projected to hit 950 million people, which is absolutely ridiculous considering Amazon only has around a market size of only 350 million in the United States. So Alibaba has huge room for growth. And Alibaba's cloud has huge potential to be a very big money-making company. When we look at companies such as Microsoft and Amazon, who has Amazon Web Services, because of low margins, cloud computing companies have huge profitability. And I think that with the introduction of Alibaba Cloud in 2009, the company is going to only continue to grow because of the size in the market. So there's always some risks and uncertainties when I think you should invest. I think some potential risks and uncertainties are potential more slowdowns in the Chinese consumption patterns because Alibaba is very tied towards cyclical citizens' cyclical cycles, such as they spend more during during the holidays. In China, it's in March, which is the Chinese New Year, and in like the fall, they don't spend as much. But with slowdowns and the trade war and everything, I think that potential slowdowns in Chinese consumption could hinder Alibaba's growth, although I don't think it's going to be that big of a hindrance to the company. Another uncertainty is China's government crackdown on mobile payments. Recently, there's been a huge crackdown on the company going after what they deem to be unregulated mobile payments. And this could be a big concern if the Chinese government continues to go after these mobile payment systems, especially Alibaba's, because they make up mobile payments make up 80% of the business. And the last risk and uncertainty to me would be the new CEO and executive chairman. This could be a big uncertainty because whenever a new CEO comes in, you never know what direction they take the company. But I believe that with Jack Ma making the pick on the successor, that Daniel Zhang will make a very good CEO and executive chairman, and will continue to lead the company to very profitable and prosperous times ahead. So that's my presentation on Alibaba. Thank you very much. Appreciate it.